Good afternoon. This is your host, Yana Deburua from Price Action Traders. You are welcome to this session of important part of price action, which is known as a gap, a price gap. Yeah. I've been wanted to do this for a very long time. That a lot of people mistake the SNR price gap for SMC's fair value gap or imbalance, or what they call imbalance. Yeah, it's a total. There's a difference between my own SNR price gap from the smart money concept of fair value gap or imbalance. They call imbalance. Oh, so let's go straight to this. Let me show you. So if you go to several web page, or you must have read different things from the website or textbook, or from different video. You must have watched a video. Everybody's saying different thing about. Saying a carry a wrong assumption. I would call it a wrong assumption. Yeah, about a price action. You see, price action is so deep. So it's go beyond just getting to know it on the internet and continue to accept that general assumption. So if you go to the Google image and you tap in your fair value, you see a lot of this is saying the same thing, right? About carrying the wrong assumption about fair, what they call it, a price gap, Yeah. So like, for example, here we have this. For example, you see this. Yeah. This is the SMC concept of the smart money concept of fair value gap. Yeah. Here, it has generated this in that the wick of a candle, the difference between the wick of the first candle and the low of the third one, that is the fair value gap to the SMC traders. That is the fair value gap. Now let's go straight to, or maybe we should let's go straight to, we analyze it here. Yeah. So here, if we're under bullish market, under the SMC concept of fair value gap, if you are to take a bullish fair value gap, that means you want to see 3 candles, right? This is what is connoted by the smart money concept traders, SMC traders, that when you see a 3 candle moving in the same direction, yeah, moving in the same direction, that means you want to pick the first candle high, which is the week high, the high of that week, and the low of the third candle, right? As a fair value gap or imbalance. That's the gap between the high of this week and the low of the third candle is the imbalance. Then for a selling market, which is the bearish market structure, you have 3 consecutive bearish candle moving downward, right? In a bearish market, in a price decline. Then the first one, the low, you take the low of the candle, of the wick of that candle, and then to the high of the third candle. So they have this third candle. So that is the fair value gap to the smart money concept trader. That is what they believe as a fair value gap or imbalance, right? That means the candle, the assumption is that first the candle, the 3 candle, the three candle must be in the same body, yeah, of price move. Of price move. That means if this is bullish candle, so the third one also must be bullish. The first and the second, third must be bullish. If the first one is bearish, the second, third must also be bearish. That's so the first assumption. The second assumption is that the wick, the gap between the first candles first candles for buying market, that's the upper wick, the high, the candle's high, right? They have that candle of the first candle, and the low of third candle, which is the lower wick. The lower wick is the FVG, right? So that is the assumption. That's the assumption. But here, under my own SNR price gap is a different thing. Yeah. The nature of that doesn't matter, right? The first assumption is this. First assumption. The nature of the candle, of the three candlestick, is not significant as it's not significant at all as the middle candle. Yeah. So the nature of the three candle is not significant as the middle candle. Yeah. So the most significant candle there, your focus should be on the middle candle that creates the gap. That creates the gap. So the second assumption says that it is the gap, the price gap, what you understand as the price gap. The price gap is the entire body or the entire range. The price gap is the entire body, which is the volume range of the middle candlestick. Yeah. Because that holds an SNR. So the SNR level is much more price. The market objective is to, or focus is to grab, is to manipulate the SNR level that is available in the body of that of a of a momentum candlestick that creates the gap. Yeah. Yeah. So this is the assumption I've come up with to challenge the assumption of the smart money concept traders ideology of fair value gap or imbalance. Yeah. There's other different. The first and the third candle is not as significant as the nature of the middle one, the second candle that creates the gap between the close of the first candle that connects the close of of the first candle to the open of the third candle. Because we are talking about, we should view, what I'm saying in essence is that a trader should view a price gap or whatever a liquidity gap or liquidity void in terms of an SNR, which is the open close relationship in terms of an SNR. So the entire body here should be considered as a price gap and not the gap between the high of this candle and the low of the third candle, right? As we see here on fair value gap, right? So, and the nature of the body, this one could be bearish. The first candle could be bearish, and the third one could also be bearish. Whereby the middle candle could be bullish. So it doesn't matter as long as the focus here should be on the middle candle, which is what the market is coming back to fill, which creates the gap. So the focus on is on the candlestick, the nature or the body of that candlestick that creates the gap between the first candle close and the third candle's open. Yeah, that is the main concern. The open and the close of that candle determines is the absolute price gap in that movement up and down. So here under the selling the market, so the middle candle here is the bearish the body of this middle candle is the price gap, is the bearish price gap, right? So price will look up to see this place, and anything that falls within this zone is considered as what? As an intention to fill the liquidity void that is created by this second candle. Yeah, whatever that falls in here is in the sell zone. It's in the sell zone. As long as the close, this candles here is not close above, so the listing remains valid. The price gap remains valid. As long as it is not close above. As long as this place too is not close below, whenever the price is coming back to tap into the liquidity void, as long as the price gap here is not close below, so the price gap for that bullish market remains valid. Remains valid. So why we're saying this? Because in most cases, price do penetrate beyond this gap, beyond this fair value gap of SMC, and now continue moving higher. So that means the fair value gap of the or the SMC doesn't hold. In that regard, it doesn't hold. It doesn't hold. It doesn't hold. I'm not saying the fair value gap here will hold at all the time, but you can imagine that whenever you see this, this is of major concern. This one and this two. Then between this open and the close of the middle candle, there are SNRs that make up a whole, this whole is a whole single candlestick. Yeah, they are SNRs. They are SNRs. What I'm saying in essence is that if you get if this is in a higher time frame, if this is a whole daily candlestick, bearish candlestick, right? If this is a daily bearish candle, a momentum candlestick in a daily time frame, that means if you go to 4 hours, 6 numbers of 4 hour or 4 hours candlestick makes up a daily candlestick, right? So if you go to 4 hours candlestick time frame, you will have something like this that makes up a series of candlestick like this with an SNR open close. This is six numbers of candlestick. 6 numbers of candlestick. Right? Like this. That makes up a whole candlestick in a day. Like this. Yeah. So that means, let me put it this way. We have something like this. Something like this. Yeah. That's 6 candlestick. Yeah. So we have so that means we have almost about 6 numbers of these 6 of 5 of SNRs here. The price is coming back, but the price is seen as a fresh level of liquidity to grab. Yeah, almost about 4, yeah. With that is contained within the number of this a single candlestick in a higher time frame. Yeah, so that is why this candle is more significant than the rest, because it carries a weight. I'm not saying the candlestick with the next candle, but this middle one that creates the gap, that means there's no significant sellers in between this candlestick. But here there's no significant buyers between this from the open of this candlestick to the close. It's a full-blown selling pressure. Here is a full-blown buying pressure, right? So it is not this week. It is not this week here and the distance between this week and the 3rd week. No, it shouldn't be. So meanwhile, it is the opening of this candle to the close of it that determines the price gap. Yeah, because this is the connector between the first candle and the 3rd candle. is the connector. So let's go to chart and we'll be able to see how this plays out. How it plays out to be. How it plays out to be. So please take note of it. Take note of it. So I told you the body of the candlestick it is the middle one that determines the price action when price falls back into this zone. Yeah, that we initiate selling at the zone here. It is the nature of this candlestick. Yeah, this is it. So let's go to the chart, our chart or trading. Yeah. So you will see here under weekly chart of BTC USD. BTC USD. You can see that this is a weekly chart. It's a weekly chart, a weekly time frame, right? Here we have this. This is a price gap. But under the smart money concept of price gap, this is what they assume. This is what they assume as a price gap. Sorry, as a fair value gap. Yeah. But you will notice that price breaks and still move lower because price is looking for more SNRs to reject, to take out the liquid and then reject it. You see that we've played this forward, right? See it? You see it, price close and cut out and break and still come down to this level. So we're going to wonder, why does price need to have to come down to this level and bounces and continue going up higher? Because of what? Because of the price gap here, because of the gap SNR here. This is a gap SNR. Because of the gap SNR here. So that means this is the beginning of the entire body of this middle candlestick. Is the entire body here. The entire body. The entire body. Right? And not this. The entire body here. So determines this thing. And price moves from there and moves up higher. Moves higher. So on a very thing, then another thing you want to note is that the wick, most cases, the wick here can be closed. It doesn't can overlap. But in SMC fair value gap, the wick must not overlap. That is the assumption. That the wick must not overlap. The wick of the first candle and this third candle wick must not overlap. Must not overlap. That is a balance. And there's no fair value gap or imbalance. But here, the wick can overlap as long as this body is a momentum candlestick. This candlestick must not be a boring one or a low volume candlestick. As long as there is a momentum candlestick from the close of this candlestick to the open of this one. So this candlestick must, the connecting candlestick must be a momentum candlestick, right? So the wick of the first and the third candlestick can meet. It's not compulsory. It's not compulsory that the wick must not If you see, watch example, see the example, see an example here. See an example here. Where is it? Where is it? Where is it? Where is it? Particular. Looking at there's a particular candlestick. Let me take it to daily. To get. Yeah, this is another. This is what I'm talking about. This is what I'm talking about. See here. So the week of this candlestick comes down to overlap the first week, and price come back inside this price come back inside it. See it? Price come back inside it and tap into the zone, and then goes higher. 1, 2, moves higher, right? So in that regard, it holds. It holds as long as there's a momentum candlestick that gaps from the close of this candlestick to the opening of this one, right? So, for example, here too, I see we have an overlapping week, alternative week that overlaps. First one, third one, and price moves in there and then comes down. So because the price is looking at the entire this thing here. Yeah. So that if you that means there must be an SNR here, that body. An SNR, was an SNR. The body of that candlestick. Wow, you can see this is the SNR. So that momentum candlestick in daily carries an SNR within, which price tap into. You see that? Price tap into. And because you can see this also as this is the 4 hours gap within a daily gap. You can see price took the entire candle, the entire gap, the range of that body, and it comes down. So, but if you are to talk about the SMC, this is the fair value gap for SMC, and price still broke and trade above it, and traded above it, right? Traded above it. The same thing happens here. The same thing happens here. You can see this 4 hour candlestick here that price reacted to here in the future. This is price gap. You see the body of the candlestick first and the candlestick. This is the bullish candle. This is the bearish candle. It is the middle one that's of most importance. The middle one. See it? Within the daily, this is what we have. This is what we have. As long as price does not close, no price closes above this range. So this price gap remains value for sell, remains value, and price came down. You can imagine if it would have been a SMC stuff, you'll have focus on your focus will be here, right? Price close above it. Price close above it. Price close above it. So this place, yeah. Yeah, this is the candlestick. Not close above it. So that is the ideology behind the price, the SNR price gap and the distance. So there's a difference between the two concepts. There's a total difference. Yeah, there's a total difference. For example, this place, you can see this place here under 4 hours. It's under 4 hours. But if you put this into daily, we see that place as what? As a daily momentum candlestick. The price comes. Yeah, that's it. Because this is the 4-hour gap within a daily price gap here. This is the daily price gap. The daily price gap. So you refine it over 4 hours to be able to get this thing out of this place here. Then this place must have, this week must carry an SNR that this price is rejecting, right? So take it to 4 hours. I'll be able to see the SNR out of it, 4 hours. SNR, then 1 hour, take it to 1 hour. Let's take it to 1 hour. That's 1 hour SNR. You can see it, we track it down to this place. 1 hour SNR. 1 hour SNR, yeah. And see how we gap. 1 hour. This is it. Yeah. So you can be able to trace it back into that SNR. This is at low down close. Then price come back into this. You can see that there's an overlap here. This week overlap this. But because there's a body here that separates this from that connects this to this. So that's where price came back into and take out. Right. And tap it to the SNR. And then goes higher. This is another one. So the overlapping does not really matter in my own SNR so that you don't miss out on opportunities. Yeah, you don't miss out on many opportunities. You see price tap into it and again goes higher. Because here, if you take this in lower, you're able to see the SNR within that body. This price is rejecting. Take it to 30 minutes. You're able to see the SNR. This price is rejecting. You see how this 30-minute price gap. 30-minute price gap. Take it to 15 minutes. Or you can see it. This is the SNR. This is the SNR. So this is the SNR. And here we have a price gap here. This is price gap. This is the price gap in 15 minutes. The price gap, 15 minutes, and price move higher. So that is the idea behind this. We can do more on the. So that's what, when I posted this group, my Telegram group, this is what I posted, right? So you can see that here, if you talk about this SMC smart money concept fair value gap, you wouldn't want to take this trade because it did not fall into this fair value gap zone, into this. See, it didn't fall on it. But if you are considering it in terms of SNR, the entire body here that gaps up from this close to the open of this candlestick is, if you consider it as the price gap, you will have been caught up with this as you see group into it. So that means in between this place here, which we have done in that examples I have shown to you, there is an SNR in this what we call the rejection block that falls into this. There must be an SNR here that the price reject and which falls upon the price gap. So that's why I posted that. You see that the most significant candle of the price gap, that's the middle candle, the most significant candle. Yeah, the most significant candle there. That when price is coming back, you are looking at this place, the entire this place, for price to fall into. And whatever that happens here, the nature of the price did not close below, but reverse inside this entire range here, entire range of this candle, we have a reversal. So you buy into it. You buy into it, into interest reversal, you buy into it. Not this. Not this, you are not considering, because this does not conflict the whole body of this. So it has, we have come to challenge that. We have come to challenge that. We have come to challenge that absorption. Yeah, this is where we go to that time. You can imagine from here what somebody will have missed here. What somebody will have missed here if you have wanted to trade based on fair value gap or of SMC. You can imagine what we'll have missed here. Because this price does not come into this zone. Doesn't come into this zone. Yeah. And the same thing happens here. See this place? You can see this place. You can see this place. See here. See here. See here. Yeah. If you have to take this as a fair value gap, then what about this place? It is close below, so you are selling. But because the entire, instead of taking, but if you look this place as the entire price, this candlestick, yeah, as the entire candle, right? So you will have captured with this place because it doesn't close below this, below the opening of this candlestick, of that price gap candle. It doesn't close below it. It doesn't close below it. As long as the price does not close below, right? You see it? But here, under this fair value gap of SMC, it was closed below. So that is, was closed below. Price moved into the system of this week. Let's see, there must be a price action, a kind of this in there. So that is how we trade it. Let's take it to 4 hours. Get it in 4 hours, 4 hours, 4 hours, 4 hours. So we'll be able to get the 4 hours this thing here. See the 4 hours that's contained within the week of that daily week, and price tap into it here. So you don't ignore a week. You call it a rejection week. The entirety of this place. Price falls back into it. The entirety of this place is the price gap. See it? The price does not close below it. The entirety of this place is the price gap. It is the nature of the body of the candlestick doesn't matter. Doesn't matter. Please take note of that. It doesn't matter. This is bullish. This is bearish. It is the middle candlestick here that matters. The middle candlestick that creates the gap. This middle candlestick that creates the gap. So that's your focus. That's the focus. Like, for example, you see here, see this price global August up and then we have this as another one. This is a bullish candle, this is a bearish candle. It is this one that matters. So you should not be confused when you see an opposing candlestick as the first and the third candle, right? You shouldn't be confused. Yeah, just focus all your attention on this candlestick here. So that's what price will react to. That here on this candle. Yeah, that's the like this place. You can see that this place there's an overlap here. There is an overlap here. But price reacted here and rejected, right? Because he's looking at this candle as the entire, yeah, the range. See, probably if it is in, let me say daily. Yeah, because the daily is the entire is in there. See it here. So that's what we want to look at. God bless you.